So for anyone that doesn't know, Jim is uh, we've done a lot of things with Jim, but to be Jim, can you sum up? I was going to do it, but maybe just give us kind of the 1 minute breakdown of kind of who you are, what you're up to down there, just to give people context of why of kind of where we're coming from and why we look to you for a lot of the kind of the insights into the U.S. investing.
Sure. Yeah, my name is Jim Sheils. I've been a real estate investor for, holy cow, almost 26 years now. I started in 1999. And a few years into it, I met these two brothers named Nick and Tom. We became friends instantly. None of the three of us knew exactly what we were doing, but we kind of forged forward together and ended up making some ways into real estate. And my journey went from doing bulk foreclosures in California and then Florida to about 10 years ago, switching to an all new construction model. It's called build to rent or new construction turnkeys. And I've been able to work with a lot of international investors over the years. And Nick and Tom and I have been brainstorming together probably for about 17 years and started working together over the last few years because of some changes in U.S. financing to Canadians, some changes that were happening up with you guys were. And so my job now is to build successful rental portfolios with new construction without the headaches and putting most of the pressure on us to make sure that they succeed.
Yeah. So, and you're working with investors, so you do the build to rent model. So it's new homes for, purpose-built rentals. And you guys are doing, what's the ballpark? I mean, I know it ranges, but can you give a ballpark of how many properties per year do you think you guys are?
About 800 properties per year.
So 800 properties per year. So to give everyone context, that's just the volume on a yearly basis. And then they have the management division as well. So it gives us just complete insight into kind of just the full landscape. And that's why we're fortunate to kind of have Jim on to jump on and kind of give us this breakdown every now and again. So it's great. So, okay. So with that, Ada, you want to throw these slides up? Perfect. So here's kind of some of the stuff that we want to discuss. So Jim, I think this is from you. This is the stuff that you look for when you're looking at a market, I believe. Can you kind of just break this down for people? Because just to give us some context, and then guys, we're going to take these concepts, we're going to apply them to an area. So everyone gets an understanding of like when Jim's looking at these areas that they're developing in, why are they looking at these specific areas and how it comes back to these kind of points with like kind of real life examples so we can kind of see it in play and how it works.
Absolutely. Yeah, this was taught to me many years ago, Nick, by a mentor where as real estate investors, I love cash flow and I love growth. And I know it was you and Tom who taught me it's not timing the market, it's time in the market. And it seems like my luck has continued to grow, Nick, the longer I've been in the real estate market. But to plant seeds in the right market is really important. And I was taught these 5 factors that if you can find 4 of the 5 of these factors or all 5, then you're not depending on appreciation, but you're doing a pretty good job of getting in its way. And that's what I always tried to do is get in the way of growth, get in the way of appreciation and look long-term. And these 5 factors really have been the guideposts or the guardrails to get me there. And so these are my Rosetta Stone. If we're going to build in a market, if I'm going to invest in a market and I am more of a growth player, yes, I want cash flow, but I want to try to poise myself for growth. I look for these 5 factors. And they're pretty straightforward. Economic growth. Are there more jobs going in? Is the economy in that local area growing? Population growth. This is a no-brainer, but one we have to look at. There's areas in the U.S. where the population's depleting. I don't want to go there and buy rental property when less tenants are coming online. I want to go where there's wind at my back and more people are going to. That's one of the reasons I left California and went to Florida because of the population growth. Affordability. Nick, this is the word of the year. And some of you have probably heard me, some of the earlier talks I've done to launch the year of our efforts. Affordability is key. We stick to affordable markets. I don't do luxury. I'm in coastal communities, but we're not doing the luxury high-end properties. We want to go where there's, a low median priced home combined with a high average family income. This is what we look for, sticking right near an affordable median price for areas. And affordability is where we're seeing most of our success. And coupled with that affordability, Nick, is desirability. I don't want to go anywhere where I will not walk down the street at 9 o'clock on a Friday night. So I want them affordable, but desirability for me is safety. U.S. is some tougher areas than Canada, just from the sheer volume of people. And I want to go where it's safe, and I also want to go where people want to live, where there's friendly landlord laws. That's a part of my desirability as an investor. And then supply and demand as a builder, Nick. Obviously, I don't want to go where there's an oversupply of housing. I want to go where our local governments are releasing reports saying, "Hey, we need more rental property, residential rental property." So we're always looking for that positive, healthy supply and demand in our favor. And I found that following these 5 factors, Nick, it's kept me out of trouble. When I haven't listened to them, it's got me into trouble. And then it's a good long-term approach.
Did you just say, as part of that Americans are tougher than Canadians? Is that what I heard?
I did not say that. I said we're a little more unrefined, and so
No, I hear what you say. There's some areas, and like every city, there's good areas and bad areas. And you're right. I feel like it's definitely the places I've been to in Canada as well, but I do feel like it's more prevalent in the US, and probably because of what you said is just the population. Is that
30 million to 30 million? Yeah.
But I've been in cities like, I remember, I think it was Dallas I was in. I was dropping off a rental car, and it was in the morning. So I was like, oh, I'll drop it off. It wasn't too far from the hotel, and I'll walk back. It's nice. And I was walking back, and I was literally like, when I dropped it off, I'm like, oh wow, I just went under the freeway, and I was like, okay, under that freeway, I'm now on the wrong side of the tracks. Like, it was vacant lots, a lot of homelessness, and they were drunk at that time in the morning. Kind of, a couple guys started looking at me, kind of maybe screamed across the, across the sidewalk. I'm like, just head down and walk. So, I mean, it's just, and then we were staying in a very nice area that was literally a 5-minute walk away. And it's just, there are these lines drawn that it's helpful when you know the area, right? And what people want.
And I think you're hitting on something really important too, Nick, that I want to double down on. If you're a Canadian coming over the border, just know it's different. And the way that I really found out it was different is, man, it was almost 20 years ago. Our mutual friend Greg took me out to his properties in Calgary. He had, investment properties, and he said to me, "Hey, we're going to go into a really bad area of Calgary right now." And I said, "Okay." He's like, "I got a few properties there." And we're driving around, we're talking, and I stopped and I said, "Hey, Greg, when are we getting to that bad area?" And he looked at me and said, "We're in it." And so it showed that there was just such a different conception of, again, a bad area in the US seems to be a lot worse than a bad area in Canada, from what I've seen. So
especially that type of place. Okay, cool. So now let's take these. So that now we want to dive into one area, and we're to kind of give examples of how you guys look at this particular area. So this is one of your favorites right now, and how it applies to these kind of things, right? So I think
let's dissect an
area.
area.
What we struggled with was you couldn't control the slide, so I think I'm going to do this for you here.
Okay, no problem. So our top pick right now, Nick, if you go, is the Ocala, Florida, Central Florida markets. If you look at here on the map, it's below Gainesville, which has got a big medical hub, University of Florida, and it's above the Villages. If you haven't heard of the Villages, I'm sure you had. It's the second largest retirement community and growing in the U.S. So, and Ocala has its own economy, which we'll talk about. And we'll talk about some of the other factors. So it's very centrally located, which is definitely a plus. Also, and a couple of things we'll go over, lowest hurricane risk zone in the state, which if you're not used to hurricanes, that gives some safety.
So this place right below it, that you're saying this place, the Villages, that's the second fastest growing retirement community in the U.S.?
Oh, yeah. You've never heard of the Villages, huh? There's all sorts of jokes about it. It's like the continuation of Woodstock. It is quite a scene there. It's called senior adult Disney, and it's the second largest in the nation. I think the largest is in Arizona. This is the second largest. So
that was, everyone's driving around on their golf carts and they put the LED lights and this stuff.
Yep, it is quite a scene down there, and it brings a lot of economy. These are the Ocala area, and just to the west of it, Inverness is ranked some of the most affordable living with best healthcare in Florida. And obviously for seniors who are wanting to age well and stay healthy as long as possible, that's a big plus.
Yeah, interesting. I didn't know that. Oh, you know what, Jim, before we get, I don't know what's next. Let's see. Okay. So I want to talk about Ocala for a second, but since the map's up, because there are some headlines and stuff about different, not just Florida, but different markets in the States. So like Texas is one, I think Arizona as well. Just a lot of places in the US that we hear these numbers about these these like, hey, the real estate market in the Florida, like it's, really soft or whatever the case may be, and things aren't going too well in Florida. And the first thing I think about when I see that is something we've spoken about in the past, is that, well, Florida's got a population of, I don't know, like mid 20 million, something 25 million and change or something.
It's 29 million now.
Is it 29? Yeah. Okay. So almost the population, it's like 90% of the population of Canada. So you can't paint the entire state with one broad statement about real estate, but can you kind of give us some insight into that? Because when you hear that, like, well, Florida markets are like really just are in trouble or whatever the headlines that sometimes make their way out to social media, what comes to mind for you that's, operating this market every day?
Yeah. And so it's a great question, Nick, because what people have to realize, that'd be like me saying the Canadian real estate market. And you'd go, well, I don't really know what's happening in Vancouver doesn't really affect what's happening in Hamilton. And same thing with Florida. Florida is not one real estate market. There are several real estate markets in Florida. And there will be settling in parts of Florida because, look, by any standard, we were the most popular place for about 4 years during the pandemic. And so we had a ton of attention, ton of influx. And most of that influx came to large cities, which would be Orlando, Tampa, and Miami. And we built in none of those cities. The numbers just didn't make sense. We felt it was too risky. And expensive coastal communities, which, as you remember, my main word on those 5 factors I look for, Nick, is affordability. We don't, it's very desirable to live right on a big, expensive coastal town, but the numbers don't work. And those are the ones we're seeing correction on, or some settling on, in Orlando, Tampa, Miami, and higher end coastal communities. We go to the affordable communities that are still growing. Now in times where the economy is more questionable, affordability is key. So there can be areas that are having some softening at the same time as there's ones that are having great performance, like Ocala, because the median price in a home in Miami might be $750 now, but in Ocala it's under $300,000. Mm-hmm. And so you got to watch for some of the more popular areas and higher end coastal properties. Those are where you're going to see softening, and we have seen softening.
Yeah. So the exact same trend that we've seen in different places, like, well, even in Canada, different people go to different parts of Canada. First, we were seeing people leave the Toronto area to suburbs and driving further out for affordability. And then some people were just leaving the Toronto area altogether. They were flying out to like the Calgary area because there was a period of time where you can get something for less than half the cost out there that was a similar home. And with work from home and all that type of stuff, people were moving out there. And actually the last couple of years is a great example because we've seen softness in this market around here, whereas in Alberta, because the prices were lower, and energy was kind of finally picking back up again over there, the supply demand was a little bit out of whack and it was pushing prices higher. Yeah. So so same principles everywhere. But okay, so let's circle back to this. So we're in Ocala. We're going back to these 5 things. Top market pick, Ocala, that's where it is.
And this just thoughts about it. We can get people copies of the slides too. It's called the horse capital of the world. Retirees, very family oriented, nature lifestyle. The Silver Springs Park, state parks. There are dozens of freshwater clear springs there. If you've never seen one, it is something out of the Caribbean. There's a good picture of it. So it's got a very nice lifestyle. It's not a beach lifestyle, but it's a nice lifestyle. And then horsing. My partner has been into horses since he's 15 years old. That's where he met his wife on their first ranch they were working on together. And they own horses. The joke is they collect horses, I collect kids, because they have a few horses. And as you know, Nick, I have 5 kids. So that's the big joke. But I'm not being involved in the horse economy. I didn't know how much it was worth. But take a guess, Nick, how much the horse industry brought to the U.S. economy in 2023.
I'd say it's got to be tens of millions, I would think, if not even more. Hundreds? No,
107. You can look this up. 177 billion.
No.
Billion. You can look it up. I want everyone to fact check me. 177 billion. And the new World Equestrian Center headquarters was built 7 years ago in Ocala, Florida. I had no idea. How much
I know a
economy?
bunch of people that are down in Florida now from my daughters from the stables that we're at. And
Oh
they go to
yeah.
Florida. They go to Florida every year for a few months. Like it just becomes like, yeah.
This is the Mecca. The Ocala area is the Mecca. So this is, almost like parts of Kentucky, but Kentucky doesn't have the World Equestrian Center. This is a multi-billion-dollar project that went in. And so think about this, $177 billion economy. Normally, you have to have some financial comfort to be involved with horses. And one of the main meccas is here just in Ocala, Florida. It's a stunning property. I've done videos on it. So that's one thing. We look for economy, right? Also, if we're looking long-term, Nick, you know that I'm always looking to say what's going to happen in the future, not just the next 12 months, but let's look out 12, 20 years, if I'm going to pass properties down to my kids. Well, Woods and Pools did this project that shows that the Ocala metro area will grow by almost 57% over the next 30 years. I mean, that's with people passing away, growth. That is a very positive amount. And when you're saying, the population over the next 20, 30 years is going to grow by 57%, you're going to need more housing there. And so another thing, if you go to the next slide, Nick, you'll see an important combo. So now in that same amount of time, the employment is supposed to grow by over 67%. So think about this, the next 20 to 30 years, the population is supposed to grow almost 57%, and the employment is supposed to go 67%. I mean, imagine if it was, okay, the population is going to grow 56% and employment's only going to grow 21%. That would kind of scare me. But the fact that employment's outpacing population, we were really interested in this.
Yeah, and to give everyone some context for some areas up here, like we were having people approach us with deals. This was now probably around 2010 or something, and they were from an area, so Windsor area, right across the border from Detroit. And there were some multi-unit properties there. Like, hey guys, come buy these properties. Like, why don't you buy them? Like, look, the numbers look great. Well, the numbers looked great from a cap rate perspective because no one was moving. People were at that time with the downturn in the economy, people were leaving the area like in droves. So your point here about population growth, I mean, we've seen it just around the Toronto area, what that does. If you can ride that trend in an area, to like what you said earlier, when it's, you've gotten kind of lucky over time because you've put yourself in the right place. We have a marketing mentor, the name Dan Kennedy, and he always told us, he's like, guys, don't reinvent the wheel. There's rivers of money that are flowing everywhere. There's rivers of money flowing. Just put yourself in one of those rivers. So like if to your point about the trends and the population trends, if that type of trend's happening someplace, and it can be Ocala or another area, that's what you want to look for, in my opinion. Same for any long-term buy and hold. I agree with you completely.
Yeah, so remember, going back to the 5 factors, the first 2 are economic growth and population growth. This shows the 2 working together. And another thing, again, Nick said that I have not heard the word tariff so many times, like in the last 50 years of my life, as I have the last 2 months. So, but with tariffs, and I'm sure we'll get more into that, what the U.S. is trying to do is keep some manufacturing jobs in the States. And so there is a whole manufacturing section of Ocala that is room for growth, and it's very business friendly here. So bringing in an additional manufacturing economy to this area could be a very, very additional big boost to the local economy. So we're watching that. So again, this is a trend that we're seeing. More manufacturing. This area is already setting plans to go deeper into it. And we like that, to have that multifaceted to an area. I don't like to go, Nick, to areas where there's only one industry. There's some areas in the Midwest I was encouraged to invest in years ago, and thank goodness I didn't, because that one industry moved or died, or you want multi-industries in an area.
Yeah, we've seen places like that around here, and they get that. If that industry changes, they get hit really hard, really fast.
Yep. So affordable. Again, Ocala has some of the most affordable housing, which is one of the reasons the population is growing. So we'll talk about that. And last year, Q1 of last year, was the #1 city where people were moving to in the U.S., which didn't surprise me. Again, we had a lot of wind at our back from the pandemic, and it had a good rating, and it was affordable. So that continues. So we'll look at a couple of the rankings. Again, when you're looking at an area, guy, look at the rankings. But this is a pretty interesting one. When people say, we hear that Florida is softening, we hear these, that it's sitting longer. I always say, which type of property? Which type of property are you focused on? Is it a higher priced property in a higher priced area? Or is it something like this? Now, right now in our state, we only have 25 affordable rental homes for every 100 tenants that need them. Think about that. Because a lot of the builders were doing bigger, more expensive properties in certain areas, more custom, luxury. But we need workforce housing, Nick, and that's what we build. So we know in our segment of the market, there are people that need to rent them, which gives a great opportunity for us investors to own them because there's more of a need for them. Yeah. And then we'll go through some rankings. 69th best overall by U.S. News and World Report, Ocala.
Oh, sorry.
Well, that's okay. Top 10 place to live in Florida by U.S. News and World Report. 36 best performing city by the Milken Institute. And then the Ocala inventory. So if you go back, so you look at this, Nick, people, you guys are all very educated in real estate and how it works. Typically right now, it takes about 62 days to sell a property on the market there, which is
faster than the state. And that's the state average currently. Like, I guess the state average before, like 2 years ago.
Yeah. Well, we'll go to that. So right now, 62 days, the state average, the average in Ocala, years ago during the pandemic was probably 15 days, which it's never been like that. A healthy market here, Nick, is normally about 85 days. That's like an average, but Ocala, the Central Florida area, these affordable areas, it takes about 62 days to sell a property on average. Yeah, and month supply. I know this is something you and Tom track. Right now, this area is at 5.2 months of housing supply. Again, let's compare some different eras that I've been through, Nick. During the pandemic, we went down to 3 weeks of housing supply.
Yeah, it was ridiculous everywhere. It was nuts.
It made no sense. However, let me go to a painful time in my life. Back in 2007, right before the meltdown.
This is in California.
This is in California and Florida.
Okay.
Tracking both. I was in both at that time.
Okay. So, and what did it get to?
16 months. 16,
wow,
17
it was that high.
Oh yeah. So you look at 5.2 months, and I'm saying, well, let's look at an incredibly strange good time, the pandemic, 3 weeks, to a really tough, worst time in 100 years, bad time, 16 to 17 months. We want equilibrium, and that's where we're seeing ourselves at in affordable areas like Ocala right now.
Yeah, these numbers of housing supply and sales time, see, this could even be a little bit longer, actually, and it would still be a balanced market. But those types of things, that really just kind of states that it's kind of like you said, like it's like a healthy, balanced market right now, which, look, I own property. So like this, aggressive run up in property prices, I benefited from it. I don't think it's healthy though. It's not healthy. Anytime things go up at that pace, it's not healthy. It means there's problems elsewhere and they're coming out in that one area. But for me, for my planning as an investment and all this stuff, especially with real estate, the slow and steady approach with appreciation that just over time, it's just much healthier because it creates a solid foundation underneath. But that's just my own personal opinion. But, we could see what's been happening in the Greater Toronto area recently after we've had this large run up. And now everyone's like, oh, what the heck's going on? It's specific to the condo market. There's some real softness in there. So I really think there's something to be said for that people kind of sometimes overlook. So I really actually like that.
Absolutely.
And remember, we're talking about Ocala. This can be like we can look at this in any area. Like, so let's say you invest in Phoenix, that's great. But if Phoenix is appreciating at, 10% a month, well, there's very likely that's not going to happen. And there's very likely going to be a correction on those prices as well. So don't get caught up into whatever hype without, looking at the kind of underlying fundamentals of the stuff. So just to kind of bring it back to that, but sorry, Jim, go ahead on this.
No. These are all good points that you want to slow down because these are guideposts that you can use in any market. We're just giving examples of guideposts of why we like this market a lot because we're following those 5 fundamentals. And again, Nick, you said before, hey, there's a lot of talk or properties still selling. So let's just look at the sold. There was 3688 homes sold from January 24 to 25, and that's up from 2697 the year prior. So
that's a big jump.
That's because it's the growth, and also there was more building happening.
So that's in Ocala.
That's in Ocala, yes.
Ocala. I'm saying it wrong. That's a pretty big jump. And then what's the general trend that you've seen in, like, if I looked at that number in, probably, like, call Miami, for example, because Miami went, ballistic, and, it's really, I think it's softened. Are home sales down in January year over year? I would imagine. Do you have any
Yes,
idea?
they're down. And when you look at, and we'll go into that in a minute, they're down. And when you look at the price points, I think you'll see why.
Oh, okay. Okay. So keep going.
Affordability is key right now. When we were, 4 years ago, Nick, locking in at 3.5%, and now it's 7 on an expensive property, that really, even for people that are doing pretty well, can be a big hesitancy. And that's what we're seeing in the US, this huge jump in our interest rates.
Got it.
So let's look at this. So right now, a home median price, just over 300,000. Just over 300,000. And look at this. This is really important. Wherever you go, first of all, I love median priced homes. What I learned, if I learned anything in 07, 08, it was the high-end expensive stuff and the low-end bottom of the barrel, where I told you I will not invest anymore, where I wouldn't feel safe walking down the streets, or, there's no home ownership. It's all landlord owned in really some tough areas. Those two areas, Nick, I watched them plummet in 07, 08. And although there was decrease at the median value spot, that median pricing, it held its line much, much stronger. It went down a lot less in percentage. And then in the good times, it appreciated. So I always look for that median price. Is it affordable? But also, what's the local household income? What's the average family income for an area? Because you want to make sure whatever their income is, can it match buying the median priced home for that area? Ocala has an exceptional one. I mean, look at this, 77,000 average for a $300,000 home. That's a pretty good number. I could, bring you through other examples around the US where it's, the opposite of, you go to San Francisco, New York, or Miami, for example, that average income is not very well matched to the average priced home.
No, that's 4 times. That's healthy, like you said.
Yeah, so we look for this. And this is just an example of a property. The reason why I wanted to show this, Nick, too, is wherever you go in the US, if you're going to invest, like I know Nick and Tom and the gang have brought quite a few people down to Florida, but you want to double check the rumors. And so the reason really why I showed this slide, this is just an example of one of our single family homes. You can see the pricing still well below 300,000. And there's an important number on here called insurance.
And I was just looking, it's only $64.
And this is a quote from our insurance company that we use. Again, we have no financial affiliation with our insurance company, but the owner of it has insured most of my properties, most of my partners, and most of our now client base of over 1,000 investors. And there is a rumor out there right now that you can't get insurance in Florida, right? I did it from stage at the last event, Nick. I heard you can't get insurance in Florida. And I heard you can't get, international financing. But for these, there is a huge difference especially in Florida, if you're going to come down here, in buying a new construction home built 2004 or newer, or an older home. The insurance companies are all about risk. This assess the risks, and this is what they charge for this property. And there's lots of reasons why that I can go into. But if you're hearing those rumors, you want to dissect them. Just like Florida is a big market with submarkets, different houses are easy to get insured. Others are harder to get insured. But we're not doing old fixer-uppers on low-lying ground. We're not doing houses, right at the beach where there's a higher risk. We're a few miles inland. So that makes a big difference in your insurance rates. Inverness is just, again, Central Florida really exists of Ocala, Inverness, and Citrus Springs. Again, just talking about the historic downtown is beautiful there. It's a great little town with local festivals, great lifestyle, community, outdoor living, tons of trails and national parks. And it's even more affordable than Ocala. You can keep clicking. Again, I get you the copy of the slides, exactly what we just talked about. Right there on the bottom left, Nick, that is Stump Knockers. They have a famous Gruben. It's a grouper Reuben. And so they call it the Gruben. Oh. It's phenomenal. So it's my favorite spot. So I made them put Stump Knockers on there. Very historic. But again, what's my word? affordability. So top 10 cities to retire on less than $3,000 a month. So number 5 was Inverness. They're saying you can retire there with $2,900. Fourth best place. Annual events, festivals, Inverness Grand Prix, motorsports festivals in November. This goes to my number 4 of desirability. Why would people want to live there? These are the reasons why. Great trail town outside, endless springs, the Wallace Brooks Parks, and the chain of lakes there. It's really nice. Cycling, paddling, boating, fishing, hiking. This is what people want for a local area. And all of that is affordable. Those aren't expensive hobbies to have. Inverness too, let's again, affordable. Cost of living 12% below the national average, 15% lower than the state average. These are things we look for again. Median listing for a home. I mean, look at this, Nick, 269. So 269, I mean, we're still at an affordable rate here. And the community aspect is it's some place that people really like to live. A lot of senior residents, 39% of them age 65 or older, which is great because, you have a question?
Yeah, is that so in that demographic? So, that's a large portion of them. And you're finding that in that area, in that demographic, they are renting the purpose-built rentals. Like that is that who's filling these properties, who's moving into these properties you guys are building? Or no, I mean, not all of them, of course, but like a chunk of them.
It is some of them renting, are single family and duplexes. The duplexes are very affordable. They're single story. We do have seniors renting them for sure. What we found is, again, the job market here is actually very good. It's the most affordable. Inverness was ranked the most affordable market with the best healthcare in Florida for all Florida areas. It was number 1 in the rankings. So it's bringing a lot of job source there. So it's not necessarily the seniors, although they do that. It's the people moving there for the job source.
Gotcha.
So
Okay.
it's the jobs that can be provided by them.
Okay, that's why I was asking, because I was like, wow, 39%, because you would think most seniors probably aren't renting, if they're living there full time, if they're moving down, if they're there for a couple of months or something. But so that makes sense. And guys, we have a few, we're gonna have time for Q&A. So we have a few more slides. I think we have about 5 more slides, and then so if you have any questions, you can just throw them in. I don't know if it's the chat or there's this post a comment. You can do either one. You can just throw them in there. We can answer anything that you might have.
And again, now here's just a duplex. Again, I'm showing this because people say, I heard that Florida prices have gotten ridiculous and you can't cash flow good properties anymore. Well, that's just not true. This is with, our financing, insurance for a duplex under $100. So it's less than $50 a month to insure each unit. These are very popular, very affordable, to be able to buy basically 2 houses for, $210,000 under one roof. And what's great about these too, we can put them in single family home neighborhoods where there's a lot of pride of ownership. The duplexes are a really nice blend in there. So again, these are the kind of things you want to look for. If people say you can't find them, whether you're working with us or not, it's just ask around, ask questions, double check on assumptions.
And one of the things you put up there was supply and demand. And obviously that's something, for any market anything you're offering, any product, and you're finding this is a growing area as well. I guess it's the senior aspect that got me interesting, but I guess if it's growing because there's more seniors going there as a retirement community, then there's more sort of, like you said, support services and different things for the seniors that provide jobs, and then it brings in other people into the community. Is that kind of the trend that's happened here?
100%. And again, they're looking for affordable housing, whether it's a young family that's being provided a job by senior care or the senior themselves, and new construction, affordable, and the area has grown a lot. It's outgrown its current stock. So these, again, duplexes were sold out in these areas. It took us a while to get them approved to do more for almost 4 years. I think one of the first duplexes we got after a 4-year stint, a rock star person actually bought it, if you remember. So, but these are in high demand. They take a little time to get approved. And now that we've gotten them approved, that affordability, again, you're living in a single family home neighborhood, but your rent is more affordable than if you had a whole home by yourself. Does that make sense?
Yeah.
So
what
these
is
are in high demand.
Yeah, no, that makes perfect sense. But I'm just curious. So the 4-year approval is that was like, what was the logic behind that? They were just trying to slow down development. Like, what was it was the duplexes. They didn't want as many of them. What was the holdup there?
We were just getting the land developed. And so we had a group, we sold out of them, and then we were doing single families, and then it just took some time to get the land approved. So, there is an approval process where we had to get the duplexes approved, and we did, and now we're in a really good build out for like the last 6 months where they're just coming back on the market. So it takes some time once in a while, Nick, for we build single family duplexes and quads. Duplexes and quads, especially depending on where they're located, they're going to take longer to get approved.
Got it. Okay.
And it's just a basic single family home. You'll see, again, we're not building luxury. This is just over 1,400 square feet, a simple 3-bedroom, 2-bath, insurance, $63 a month. This is it. The old saying, Nick, is it's hard to fall off the floor. I don't agree with that necessarily, because when I think of the floor, then I go to areas that are, properties that aren't in great condition with some crime issues and lots of turnover. These properties are priced right at the median. That's where I think the floor is. I think that's where the equilibrium stays strong.
This is, to me, is such a massive point. But so if you look at this property, this is it looks like one of the least sexiest pieces of real estate, and it's no different than what we've done for decades now with investors around here. We've looked at the typical entry level starter home, and it differs a little bit in different areas. In some areas here, because of price points, it's like a townhome. In a lot of areas, it's an older three bed bungalow, whatever the case may be. But if you look at what's happened if you look at any real estate market, I don't care if it's going up, down, sideways, whatever it is, the majority of the transactions are done in that starter home category, because people are moving up into that area and down to that area. And if I want to build an asset base, I want the asset base where there's demand. And we've been kind of harping on this forever, Tom and I, because of what our family went through when we kind of got hit really hard because our dad was flipping homes, looking for a quick buck, started doing some high-end homes in a high-end area of the Toronto suburb here, got stuck with the home, property value plummeted, kind of destroyed our family a lot. Kind of one of the reasons a few reasons our parents got divorced. That's one of them, the financial stress too. But if you look at the last couple of years of what's happened in our area, as we've had this huge run up in prices and different areas have come off, the starter home category in all these areas with these principles that you're talking about, by far the most stable segment of the market, by far.
Yep.
It's not even, and there's still transactions happening in them. So sometimes it's we need to get off this. You need to get out of everything going up all the time to see what still works, and it's the principles matter. So anyways, I got it. That was my little soapbox speech. It's such an important point that people overlook, because it's not sexy. It's not high flying. It's that's your property. You know what I mean? It looks fine, but it's people always they want it with the coast in the background, or they want a big building. It's always these sexier things, right? Yeah, 100%.
Yeah, no, I agree. And first-time home buyers, that's why I don't like to go to quote unquote all investor-owned neighborhoods. Like the areas that we're building in, we're buying up infill lots. So there's already existing homes. A lot of it's owner occupied, and a percentage of homeowners and renters. And then when you put these here, that means we can attract, even though we're working with investors, if we have a property and want to sell it down the road, or one of our investors, there is a good opportunity. Let's say in 7 years, you sell this property, that a first-time home buyer would want to buy it. And because a first-time home buyer, I learned years ago, Nick, I'm sure you did, is price matters, but they're more okay, how much down, how much a month? Okay, in the US, I got to put 3% down. Can I come up with the 3%? And what's going to be my monthly payment to own this home? And that how much down, how much a month, that's why these properties, whether it's like you said, in good times or bad times, good people are moving up into them. And in bad times, people might be downsizing and going into them. But how much down, how much a month was always what I was taught. And these really do keep a strong backbone for my favorite type of real estate.
Okay, and there's a few, Melanie, Dima, Anthony, I see your questions. We'll get through these slides and we're going to circle back to the questions. So we're coming back to those in just a couple of minutes. So I don't want you to think I'm ignoring them.
Yeah,
so let's go.
Just about done. And you guys know this: appreciation, leverage, debt pay down, tax benefits, cash flow. Number 5 is important. Number 1 is how I've made most of my wealth. So that's important. And use proven system strategies and guidance, guys, when you're trying to make money in the US. Look for repeatable results. Don't go for that long shot one offer. See if someone's doing something over and over. That's where I've found my most safety and most profit. When I try something just far-fetched and untested, it doesn't usually work.
Yeah, just a huge point.
Yeah, and I learned this from you guys. I love this: time in the market versus timing the market. my luck seems to grow the longer I've been in this, and timing the market. Yeah, you can try to time little things, but it really is, if you are a long-term buy and hold player, you got to have time in the market, and that's what things you do. The exposure to the U.S. dollar, this is really important. I think, you and Tom have been talking about this. There are some things happening. If you click to the next slide, Nick, you'll see it's strong, economic attention equals stronger dollar. And there's some things happening in the U.S. right now. On the next slide that I think we're ending with, SoftBank just offered a Japanese group investing $100 billion. OpenAI and Oracle just pledged $400 billion. Apple's building AI servers in Houston and spending $500 billion. And whether you agree with it or not, Trump proposes this new pathway to residency, the $5 million gold card. All of these things are supposed to help down our national debt, bring more business back into the U.S., and then bring stronger residency to the U.S., people who might provide jobs or more investment capital from other countries. And so I am not an economist, but most people have said these are definitely green flags to what could strengthen our dollar. So to get, some exposure to the US dollar wherever you're going might not be a bad idea.
Got it. Yeah, that makes sense. Okay, let's jump into the questions. I'm going to go back to this slide for a second. This is one of the Ocala properties. So Melanie was asking, what's the property management fee after year 2, please?
8%.
Okay.
First 2 years are free. Any of our new construction we waive the monthly management fee, and then after 2 years, it's 8%.
Mm-hmm. And what gets really interesting here, Melanie, because this is a question that came up on when we've been down there with other investors. They're like, hey, I'm looking at the numbers when I add in 8%, and I was thinking the same thing. I'm like, oh, that really eats into those numbers. And then Becky, who runs their property management division, who I don't know, I think I just look at her. I'm like, she just got she handles it. We've dealt with property management company before. The way she handles it is just very impressive. I'm always impressed by her. But one of the things she shared was that she's like, yeah, what you're not taking into account, at that time we weren't, not you, but we weren't taking into account that they could raise rents to market rents every year. So she's like, yeah, well, we anticipate that we'll be having rent increases and that'll offset that property management number. I was like, I never thought about that at all, because we're in this area where, we're stuck to a 2.5% rent increase. So that impacts us a lot. So that was something that we didn't take into account when we were looking just at the property management fee as well. And then Jim, on that point, I'm curious, is there anything specific you look at? So I don't know what's happening with Ocala or in other areas with what's happening with rents, like if there's been strong rent appreciation, if they're relatively flat, does anything worry you, concern you? Is there any specific thing around that you guys look for?
No, we saw Ocala really went up and then stayed neutral. I mean, overall, the 12 markets, we saw, probably a year into the interest rate spike, a little softening of the rents, but that's definitely steadied. And we're starting to see a little incremental growth. So especially, again, what I'm talking about here is just these types of properties, the ones that we build. If you look at more luxury properties or such, yeah, they've probably had a few $100s in rent decreases. But again, that's why it's a different market and there's a smaller tenant pool.
Yeah, got it. Okay, and then Dima, you're asking how do you do private tours in Ocala? So look, I'm going to ask you. I'll mention something because I had to write down the dates before. If you didn't know, we're actually doing a Rockstar tour based out of Orlando. We're going to Ocala and Inverness, and that is on April. That's on April 30th. The evening of April 30th is we all get together. We kind of do some networking the evening before, and then we hop on a bus, which will be May 1st. But the bus, everything's included. You just got to get your butt down there. And then we all meet up and we'll take care of everything and go and check out some of these properties. And you get a real boots on the ground sense of what's happening with these different types of properties in those areas, whether it's singles, duplexes, or quads. So that's what we're doing as a group. We've done a couple of these. The next one, and there's a number of people coming on this one because this is the Rockstar Cruise is right after this one as well. So that's on May 2nd. So there's a number of people coming out to this one. one where we're meeting up and heading out. So you're welcome to come to that. You can just email the membership team, and they'll give you all the details for that. But on top of that, we've had a number of members that have reached out to Jim, your team, and they end up viewing some properties either with your team or themselves. Maybe you can explain how that works for Dima if he's looking for a private tour.
Yeah, all you got to do is get in touch with one of our property counselors, and they can help line up a tour depending on which market you want to go to. But we love visitors, so that's not a problem at all.
Okay, and Melanie said maybe you missed it. What's the required down payment for these properties, particularly as Canadians? Okay, so international financing, Jim. So
Yeah.
what's the latest? I know it's always moving, but what's the latest? Is it 30 down?
30 down is the most standard one, where I think with the best rate.
Okay.
And I know some people say, oh, well, in Canada, we only have to put 20 down or 25 down. And I say, I understand, but our prices are also a third of yours. So keep that in mind.
Yeah. So it's 30% down for the best rate, what Jim and Chris do, who's his business partner with an SI Homes, those guys, they actually buy down the rate. So they actually, as international investors, you're getting a really, really competitive rate. If you go to, I've talked to some other people that deal with some US mortgages for Canadians, and they're very surprised by the rates the Rockstar members are getting because of what these guys are doing. So that's something else to kind of keep in mind. So you can get it with lower than 30% down, but you will pay a higher rate that way as well.
Yeah.
Jim, what does it mean post 5-year hold?
Yeah, so that's if you want to go, so this is just like a snapshot here, what we have, and then we have obviously complete performance that our property counselors go through with you. That's the estimated profit based off of the numbers we do for average rent increase, average appreciation, debt pay down, what your profits will be after 5 years. Using a kind of a conservative approach based on past numbers. So they'll go through all the pieces that up to that, but that's how we calculate that.
Okay. And then Dima's asking, if we borrow money here in Canada for the down payment, do you know if that would be tax deductible? Look, I have to give the disclaimer, Dima. I always have to give the disclaimer. Check with your accountant. I'm not an accountant. Don't sue me. Don't send the CRA after me. They were just auditing us for something like last week. I don't want to deal with them anymore. So leave me out of it. All right. But but my understanding is, yeah, if you're borrowing something for investment purposes, then the interest portion of that would be tax deductible. And it doesn't matter if it's a US property, a Canadian property, another type of investment, that it should be tax deductible. I mean, there's always little intricacies to different things, but for the most part, it should be. That's my understanding. So are these regarding these US dollars or converted Canadian? So these are all US dollars on the slide.
Yes, sir. All US dollars.
Yeah, Melanie, we refer to these numbers on the slide as, actually, I was going to say real money, but it's not real money, because that we don't refer to that's like gold and stuff we refer to as real money, but we refer to it as like actual money. Whereas our Canadian dollars are kind of like it's kind of like a little bit like play money. That's the way we look at it. That's the way it feels like right now, at least. I'm telling you. And I'm traveling to the US tomorrow. So I'm going on a Disney cruise with my kids, with the family. And of all times to be going on a Disney cruise with the exchange rate and with the Canadian dollar where it's at, I'm like, holy cow. I told my wife, Jim, I said, look, when I'm down there and I start complaining about the exchange rate, about the cost of things because of the exchange rate, remind me of this conversation. So I told, I can just kind of calm down, because when you do the exchange rate, everything's going to cost me like $1 million. I'm like, this is going to be the most expensive vacation ever. Right. So, and okay, Dima, we have a problem. So Dima just said, okay, I'll tell CRA. Nick said it's good. So this is, I'm perfect. Yeah. I'll be waiting for their call, Dima. Thanks. Thanks for having my back. I appreciate it. Thanks. So that's it, guys. I mean, is there any other questions around this stuff? This is really similar to, if I go back all the way up here, it's really similar to kind of what we're like, I guess the same things that we're seeing in these areas, or that we look for in different areas, wherever it is across Canada, call it the Golden Horseshoe, whatever. It's just the same principles being applied to whatever area you're looking in. And I think why we wanted to have this call with people is because a lot of times Canadians going looking to invest in the US or any other areas, they just look at the numbers. And they're like, oh my God, like I can't believe I can get a property for 80 grand. This is crazy. And the rents are this much. And they don't look into these other factors. And then even if that goes well for a few months, which oftentimes it doesn't, we've seen people buy properties and has all the pipes ripped out and wire and all this type of stuff because they rip it out for the copper and things. Down the road, if you're planning on holding this for 2, 3, 5, 10 years, things can get really interesting in a not so good way when you're not looking at kind of these fundamentals underneath it. And that's kind of why it's why we share, we research, and all of us as together, we look at this type of stuff around in this area. And I think it's like, we shouldn't get blinded sometimes by like, oh my God, look at this low number and let me just jump into that. We should look at the same principles. And it's, we want to see how kind of, using a couple examples where Jim focuses these principles and what they're look for in those areas to kind of merge the two thoughts there.
Yeah.
There's one more question that came in here. It said, what qualifications are required by lenders for Canadians? I think I know the answer to that, Jim, but maybe you can share kind of what you know.
Yeah, the great thing, Rafaela, is the property really qualifies, not you. Now, you have to be a good standing citizen in Canada, but for the most part, for our lending programs that we're working with and other Rockstar people have used, it's the property that qualifies. So, the property, does it perform? Where is it? Will it appraise? And so you have to give a limited amount of information, but it's definitely not a full document loan.
Cool. So I think with that, Jim, if that's any other questions, we'll leave it at that.
Nick, and then I was just going to add to say, I think some of Jim's team will be at the April event on Saturday, April 12th. So if anyone wants to chat with them there, I know some of Jim's team will be up on Saturday, April 12th for the next Your Life, Your Terms event.
Yep.
Yeah, that's a good point. So yeah, so you can come out if you're coming out to that. If you're not coming out to that event, what's wrong with you? You should be. Actually, in all seriousness, we're tracking registrations faster than ever. That event is really going to hit a cap. If we hit the goal that I've set, it's going to be a few weeks before registration closes. So if you're still thinking about it, I'm serious. Grab your spot now, because that thing is going to be. We have a very hard cap on numbers that is right around 1,100. It is going to reach that. It will be full. So that's just at yourlifeyourtermsevent.com, or you can reach us the membership team. So that's April 12th. So come out. You can talk to Jim's team about Florida stuff if you want, and there's all sorts of other stuff going on. And then remember, we're doing the tour. So if you guys want to do a tour on these, go down and look at these properties in person, not just look at these properties, look at the investment thesis behind it, how they're building the properties, how the numbers stack up, look at the areas, get an understanding of how these guys are investing. They're investing their own time and money in developing roughly 800 homes a year in these types of areas to get an understanding. And then they're working with investors from all over the States and Rockstar members from Canada that are going down to buy these properties and helping them. So it's like the whole systems. We've gone to their office. We've checked out everything. It's great to see how this stuff works. So it's awesome. That's April 30th and May 1st. We'll meet you down there. Reach out to the membership team. We'll give you all the details. And we're going out as a group to look at this type of stuff. Jennifer, this is being recorded. And it will be put up on the member site as well for people to look at it. And Terrace, is there a webinar planned about properties in other landlord-friendly states? Yeah, we'll look at properties in other landlord-friendly states as well. And that's something that actually, we'll see if people we know might be expanding into some of those states, which makes it even more interesting. But to us, always the biggest thing that's always important to us is the team around it. Or the team is more important than the property, and that's why when we look for kind of like real life information from people that are actually doing it, that's why we always reach out to Jim and his team, because it gives us context into that, and then we can take these principles and apply them elsewhere. So it's more about finding the right teams for us to be able to introduce other people to it, and that's been more of a challenge. We've had many people that have said they would do great things, and or they are doing great things. And when we look at it a bit deeper, it's been more challenging than we would like to admit, unfortunately. So that's some of the challenges with that stuff. But there might be some good, solid people we know moving into a couple other landlord-friendly states, which might make it interesting. Cool. So if there's nothing else, guys, we'll leave it at that. Aiden, was there anything else?
Nope, that's it. I think we're all good.
Jim, was there anything else you want to share?
No, I think just, make sure that you can always get more information about Florida, about us, and wherever you're going in the US, just careful of certain assumptions of us being the exact same, because certain things are different. And, also test assumptions, like we've gone over them before. Can you get insurance? Can you get, international financing? All these things, have deeper answers to them. So just be careful of hearsay investing, because it can steer you down a wrong path or keep you on the sidelines when maybe you should go.
All right, cool. We'll leave it at that, Jim. Thanks so much, man. I appreciate your time. I know you guys are busy down there, but I really appreciate you jumping on, as always.
No problem. Always great seeing you guys.
All right.
Thanks, Jim. Yeah, see everybody.
Nice chatting with you.
Take care, guys. Bye.